What is financial equity? Let's talk some money basics here. And if you are anything like I was when I was first getting into more of the money, financial type stuff, I always thought equity was some sort of really complicated topic. You'd hear about, oh, well, people have equity in their homes, or they have this equity and that equity, and there's, loans based on equity. And I'm thinking, what is equity? How is this all working? But it's very, very straightforward. And if I do my job right, this video should be relatively small because it's actually quite straightforward. So I'm just going to go ahead and use a home as equity because for me, at least, that was the, most I heard it. And in the news, it always seems, people have equity in their homes. People are tapping into equity for different sorts of loans. So I'm just going to use home equity, but the general principle can be applied to anything. So yes, I have a house right here, but you could have some equity in your car. You could have some equity in any sort of object that is out there. But like I said, I'll just use the home. So the way equity works is this. There's going to be, you have your home, and this home has some sort of debt tied to it. You're going to have some sort of mortgage. Now, if you don't have a mortgage, well done. That's awesome. But most cases, there's going to be some sort of mortgage. And let's just say that the mortgage right now, in other words, what you owe on it is $100,000. So there's a $100,000 debt attached to the house, right? So the $100,000 is the debt. It's what you still owe on the house. There's a B right there. There we go. Now, there's also another number that's associated with your house. You're going to have what you owe on it, again, your debt, and then you're going to have what? Maybe you're thinking, well, you're also going to have something called, what is it worth, right? Like if I could go out there right now and sell the house, what would I be able to sell it for? And obviously, whatever people pay for it, that determines what its worth is. But you can gauge something's worth by just looking at, other different numbers out there, what of other houses have sold. But for this, let's just say that your house is worth $300,000, right? So that is its worth right now. If you were to go out there and put it on the market, the numbers, the statistics, all that suggests that, yeah, you'd be able to sell it for right around $300,000. So the question becomes, okay, well, what do these have to do with the equity that you have in your house? Well, the math is very basic. We're headed back to kindergarten here, but all you're doing, not kindergarten, maybe like first or second grade. I don't remember when you learned about subtraction, but all you're going to do for financial equity is you're going to take the worth of whatever object, in this case, the house, and you're going to subtract it minus by what is owed on it, right? So what worth minus owed, or in this situation, worth minus debt. But point here being is very basic, and you're going to subtract that out, and that's going to tell you what your equity is with whatever object you were doing this for. And in this situation with the house, what would you do there? Well, like I said, let's just pull out our trusty calculator here. And, shame on me for even needing a calculator. And I don't need it, but just for simplicity's sake, 300,000 we said was the worth of the object. And then we have to subtract that by what is owed on it, which I said was 100,000. So right there, in this situation, you would then go and say that there is $200,000 of equity in your home. And this equity is going to grow the more and more what? So here's a little quiz question. What would cause this number here, your equity, to get larger and larger? So if you're saying, well, actually, one of two things could cause that number to grow. Number one is if you continue to pay down that debt, that would cause that number to get bigger because that number is going to get smaller and smaller and smaller. The other thing that could cause it to grow is, well, if the worth continues to get larger and larger and larger. So debt going down on it or worth going up on it would cause your equity to get larger and larger and larger. And then the exact opposite would be true if the equity is going to get smaller. In that situation, so smaller equity would mean that the debt is rising or that the worth is going down, or in a worst case scenario, both are going on. But that's all equity is. It's just, okay, what is some object worth and then what is owed on it? And you subtract that out and that's going to give you the equity for whatever object you are talking about. So it's really as basic as that. What something's worth minus what you owe on it, and that will give you your equity. And equity can be used in a variety of things. I'm not going to go to that because there's also a lot of opinions on it. One just small little debate that you could find yourself in the middle of is, should you take home equity loans? Take that equity from your house and then pull out money on it. Like I said, I'm not going to go into should you or shouldn't you. There's a lot of opinions, and there's a big debate out there on that. But the point is, that's where the equity comes into play, is you're finding what something's worth minus what is owed on it. And then that is the number that all these other conversations are branching off from. So I hope this helps. And like I said, very, very straightforward topic. And I look back at it now, I'm like, Clay, why was I ever so intimidated by that? That was never any sort of, extremely complicated thing at all. It was literally just a matter of understanding some basic subtraction. So that's what financial equity is. If you have any questions, if you have any suggestions, any other questions about, money basics, leave those down below in the comment section. And, anything like that, maybe spur on another idea for a video, and that would be great. So I'm always reading comments, replying, always looking for suggestions. So I thank you in advance for that. So if you enjoyed, hit that like button, leave a comment, check out the channel as a whole. And if you like what you see, then I would love to have you as a subscriber. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.